Hey guys, welcome back to Reserved Investments on YouTube, and welcome to part one of my 5,000 subscriber Q&A series. We are filming this video at 1 o'clock in the morning again, which means literally in 4 hours, I get up to start my new day. So let's see how many questions we get through before I need to go to bed. First question, Sean, great work on the channel. I would like to request your analysis on the better investment, Hermes Birkin bags or Rolex watches. Okay, in my opinion, if you are playing in the top tier of the luxury collectibles marketplace, which if you are going after Rolex or Hermes Birkin bags, you can't go wrong with neither. You just need to understand that there are still risks operating in these markets. Now, to be fair, every asset class right now at the recording of this video in 2021 is pretty much overvalued. Whether we talk about cryptocurrency, real estate, gold, silver, stocks, bonds, mutual funds, comic books, Pokemon cards, Marvel Universe trading cards, whatever asset class we're talking about, it's pretty much all overvalued and in a inflationary bubble at present time. The market for Rolex watches and Hermes Birkin bags, unfortunately, is no different. If you are a woman watching this particular video, you're probably going to gravitate towards Hermes Birkin bags. If you're a guy, you're probably going to gravitate towards Rolex watches. Either market has its own risks and has its own rewards. They are both very similar. For instance, at present time, if you can go to the market and you can actually get someone to sell you a modern era Rolex or a modern era Hermes Birkin bag, you can flip that on the secondary market immediately for a profit. That's how much in scarce supply and demand these particular luxury collectibles are at present time. Now, in my opinion, if you're going to get involved in the market, I'll pick on Rolex first. If you're going to go after a Rolex watch at present time, I would probably tell you to go after a vintage Rolex watch. Go through either a trusted dealer or a well-known auction site like Heritage or other auction sites that cater to this end of the market that guarantee what they are listing at their auctions, and pay anywhere from $10,000 to $20,000 and buy a vintage Rolex watch. That's pretty much my advice to you. With Hermes Birkin bags, the advice is similar, except what I will tell you is you're probably going to pay on average $20,000 up for an Hermes Birkin bag at present time. What happened was Hermes was putting out bags that sold for $10,000. Well, a lot of speculators came into that market and investors, and they started buying up, if they could get them, those bags at $10,000 a piece, and they started flipping them on the market, and now those $10,000 bags turned into $20,000 to $30,000 bags almost overnight. So if you are playing in these markets, you have to have a lot of cash, which brings me to my first point. You should already be financially established if you are playing in this particular pond of the collectibles marketplace. Now, what do I mean by financially established? Well, let me tell you this. I own a vintage Rolex watch that is worth roughly $15,000 to $20,000 at present time. I did not buy my first Rolex until I was 35 years of age. You should have a net worth of anywhere between $250,000 to $500,000, in my opinion, if you are going to play in this market. Now, I know a lot of you guys out there, you already hate me for saying that. You're going to thumbs down the video. You're going to leave me a nasty comment, but just hear me out. If you go into the market and you really want to start collecting either Hermes Birkin bags or Rolex watches, you're going to buy one watch, you're going to look at it, and you're going to go, this is awesome. I want to buy another watch. So now you go back out in the market, and now you got to pay another 10 to 20 grand to get a second watch. Well, the cost of these items adds up rather quickly. So if you have $30,000 to $40,000 invested in Rolex watches and you only own 2 of them, that's pretty much, if you have a $300,000 to $400,000 net worth, that's 10% almost of your net worth tied up just in 2 vintage Rolex watches. In my opinion, you should not be putting anywhere near 20 to 30% of your net worth in these particular items. The correct asset ratio, if you are going to play in these markets, is 5 to 10% of your overall net worth. It's too risky if you go any further than that. I know there's people on the internet, there's videos out there that show guys with 6 Rolex watches. There's videos on the internet with hot chicks that show them with 5 Hermes Birkin bags. Those are the exceptions, not the rules, guys. Be very careful how much money you spend on a lot of these luxury collectibles, because I said this before, at some time in the future, these markets may just self-correct. There may be a correction in these markets where all of a sudden, a lot of popular vintage Rolex watches start losing 5, 10, 15% of their value. Or some of these Hermes Birkin bags start to fall backward in price. So you got to be prepared for that. You cannot go into these markets if you are not financially established. Now, if you tell me, Sean, I've been working really hard, I have a net worth of $150,000, all I want to do is just buy one vintage Rolex watch. Would you agree that me just buying one vintage Rolex watch for $15,000, which is 10% of my net worth, is that doable? I would say yes. If you're just going to go to the market, you're going to buy that one vintage Rolex watch, you're going to only buy one and be done with it, you can get away with that. But overall, in order to play in this market, trust me, guys, you want to have a net worth of $250,000 to $500,000, if not more. It is what it is. I don't make the rules. These are high-end luxury collectibles. And for you younger guys out there, I would strongly caution you from getting into this market until you really are in your mid-30s. You got things going. Let's put it that way. You got multiple income streams coming in. You're pretty much financially established. You know what you're doing. You're confident. You're self-assured. You're assertive. You're not somebody out there that is just buying a Rolex watch to try to impress people, because that's the wrong reason to buy any of these items. Trust me, guys. Next question. Hey, Sean, when it comes to PMG graded U.S. large size notes, what is the minimum grade that would be considered a good long-term investment? I'm going to answer this one of two ways. The first answer is it depends on the note in question. If you're going after a really rare note, of which there's only 10 known examples out there, and the highest grade you can buy the note in is PMG 45, obviously, whatever grade you can afford to buy it in, because that note is truly scarce, rare, and desirable. Now, if you're like me, and you go after a lot of the popular but common large size issues, whether you're targeting gold certificates, silver certificates, Federal Reserve banknotes, whatever your thing is, legal tenders, whatever you want to collect, if you can realistically afford notes in the 63 to 66 condition range, that is the sweet spot for me. Occasionally I will splurge and I'll go after a note in 67 EPQ condition. Other times I'll settle for a 63 EPQ graded note. So it just depends on what you're going after. I do have an educational $1 silver certificate that's graded PMG 66. The reason why I went after the PMG 66 grade for that particular note is because in order to get that particular item in investment grade, you want to buy it in 65 condition or above because of how many are out there on the marketplace at any given time. So I chose to get that particular note and pay a premium for it in higher grade for that particular reason. I'm also a huge fan of the educational series silver certificates. So I hope that answers your question. Next question. Sean, great channel. Why have the hobbies of coin and stamp collecting diverged so much since the 1980s? They share so many similarities. Both are extremely mature markets, you are 100% correct, as stamp collecting has existed for almost 200 years. Historically, they have tended to be sold in the same retail shops. Both of them document the history of nations. Why do pre-1945 stamps sell for a fraction of their 1980s catalog values, while at the same time, coins have skyrocketed? The answer for you comes down to third-party grading. Up until this point, third-party grading of stamps hasn't been commonly accepted. Now, that is starting to change. There are numerous companies working in that market, but when it comes to graded coins, graded currency, those are the markets that have taken off due to third-party grading, along with, especially if we're talking about rare coins, the advent of CAC that came to market in 2006. Certified Acceptance Corporation. That really changed the dynamics of the rare coin marketplace. So you have to take this all together. You can't just look at it as, why aren't these markets performing similarly, given the fact that they are similar overall in their documentation and the way that they transformed the antiques trade. So you kind of have to look at it from the perspective where coins had the edge due to third-party grading, market manipulation, I hate to say it, and also the advent of CAC certification that came about in 2006. Stamps, a lot of people lost interest in stamps because of the popularity of coins and currency, believe it or not. There was a lot of money that was being propped up to both these markets, and when coins started to take off, a lot of people started to pull away from stamps and said, you know what, I'm going to go with that collecting market because it seems to be more viable and it seems to have a brighter future. And that's really what happened. You would not be wrong to state that stamps are also historic. The thing that is hurting stamps right now is younger collectors are not flocking to stamps, but there is still good news. If you look at the market for rare stamps over the last 6 months, especially with the coronavirus and the crash, prices are up across the board. So I will tell you that. If third-party grading manages to take hold in that market, stamps will again have dominance in the overall antiques trade. But right now, the market belongs to coins and currency. Those are the two markets that are flying at present time. So you're looking at this properly. It's just that market manipulation, third-party grading, and the public's tastes have changed significantly over the years to the point where coins and currency are pretty much the graded collectibles that historians value most in the year 2021. Stamps are coming in a distant third. It is what it is. Next question. Sean, do you have a Roth IRA? And if so, what do you choose to put in it? I am curious if you put money in a target retirement fund or a total stock market fund, or maybe your own choice of stocks and other investments. The answer is yes. I have multiple Roth IRAs. I have one with Vanguard. I think I still have one with Charles Schwab, and I think I have one with Fidelity. So I have a couple of Roth IRAs. The predominant one that I have is with Vanguard, and this is going to surprise you because I have so many other assets with Vanguard, stocks, bonds, mutual funds, ETFs. My Roth IRA with them is actually set to a target retirement fund. It's actually the Target Retirement Fund 2035. I just chose that one as a simple choice to go with. The one that I have with Charles Schwab is pretty much predominantly composed of an S&P 500 index fund. The one with Fidelity is predominantly composed of a total stock market index fund. So that should answer your question there. I personally, I'm going to be 100% honest, and this is probably going to surprise a lot of you. I don't like retirement funds in general, just because I have so much exposure to taxable investment portfolios, meaning I have hundreds of thousands of dollars sitting in stocks, bonds, mutual funds, ETFs across multiple fund companies that I really don't need to invest in retirement funds as well. I'm okay because I have multiple streams of income. I also have rental properties. I also have my primary residence. I also have coins, currency, collectibles. You go on to ask, how do you balance everything with your antique and collectible holdings? I'm going to be honest with you. I do have roughly 20 to 25% exposure to antiques and collectibles. I am starting, especially now with an increase in prices for a lot of these collectible items that I own, I am starting to pull back a little bit on that just because I like a well-balanced portfolio and I don't want an exposure amount equivalent to 30 or 40% of my entire portfolio. So that's why I've been pulling back a little bit from rare coins, currency, and other items that I've been buying. I do anticipate getting back in those markets soon. I'm just hoping that prices start to level out and correct because right now, everything is inflated. It is insane. Whether we're talking comic books, collectible trading cards, vintage sports cards, coins, currency, toys, it's all inflated at present time, and that really worries me because a lot of these markets are on fire. But to answer your question, yes, I do use Roth IRAs. I also use, believe it or not, traditional IRAs. I just have to be careful how I navigate those particular markets just due to the tax advantages of traditional IRAs versus that of Roth IRAs. So I do invest in both, but predominantly, I like to hold the majority of my money in taxable accounts, believe it or not, because I can set it where every quarter or every month, I get paid interest and dividends that I can use as part of my cash flow to run everyday operations and to invest in some of these other asset classes that I'm attracted to. So I hope that answers your question. Next question. Sean, among newer collectibles that are speculative, which do you think, if any, are likely to become an established market and why? I give the edge right now to vintage Magic the Gathering and vintage Pokemon. I do not like the market for vintage and graded video games at present time. That has not changed. The market is way too speculative. There's a lot of companies out there. There's a lot of people that are really playing in that market, trying to manipulate it, and a lot of people are falling for it. It's just like what I see going on with some of these more speculative trading cards and trading card games, whether we're talking about Marvel Universe trading cards, Garbage Pail Kids, Star Wars trading cards from the 1970s. All of these markets, in my opinion, right now, and I actually have proof, are being manipulated by certain individuals. They're pretty much akin to throwing spaghetti at the wall and seeing what sticks. I honestly wouldn't be surprised if Power of the Force 2 Star Wars figures from the 1990s are the next target on their list, along with Beanie Babies. I'm going to be 100% honest, guys. I see a lot of people trying to manipulate these markets, and they're doing it right under your noses on eBay, on a lot of these collecting forums. And rather than call them out on it, you guys would rather attack channels like me or people like me who speak out against this stuff. You know, there's an excellent book. I've done a lot of videos on this, how to manipulate the antiques and collectibles trade. Instead of coming at me telling me, well, Sean, you got to give more advice or more commentary on how this market manipulation is playing out in your videos. Guys, I have over 220 videos uploaded to this channel at present time. Feel free to search Reserved Investments on YouTube anytime you have some time and go in and watch those videos, and you'll see all the commentary I did on market manipulation and how to recognize market manipulation in the antiques and collectibles trade. There's a book by Harry Rinker that I have recommended multiple times. It's been in the background of a lot of my videos, that if you can find it on the secondary market, it does sell for a significant premium. By all means, get a copy of that book, and that goes into detail on it. These markets have been manipulated since the beginning of time. And a lot of you guys out there, especially the younger people, all you guys see is dollar signs. You haven't been around the block yet to see how these markets work. When you invest $10,000, $20,000 in a market, and that market turns on a dime, and you get slapped right upside the face, and you end up losing $5,000 to $10,000 in a 6-month or a 1-year period, that's when you're going to get a wake-up call. And that's when you're going to go, you know what? That dude, Sean, in Reserved Investments, he really was wise talking about these markets and how they change over time. Wow, I got to give him credit. That's usually when it hits these people, after they cut me up in the comment section. I've been doing this for a long time. I've said this before. Even if you don't like me, you don't want to watch my content, you don't want to read the articles that I write for Antiques and Auction News, go and seek out Wayne Jordan, Harry Rinker. Go read their articles. Go send them emails. Interact with them. Say, hey, you know what? This guy Sean in Reserved Investments, he drives me nuts. I'm coming to you because he said that you have similar advice for me. And they're going to spend some time. If they send an email back to you, expect it to be about using caution in a lot of these markets, especially in the year 2021. I'm being honest with you guys. I am not misleading you. It's just like when people come to me and they say, hey, Sean, I want to invest in coins. I really like some of the videos that you've done on rare coin investing. What is it that I tell you guys? If you don't have a passion for that market, please do not get involved in that market. Again, guys, I don't have a horse in the race. I'm not trying to steer you away from one asset class to another. What I am trying to do on this channel is get you to think in new ways so that you yourself become financially established and you have the fundamentals and the dynamics to analyze these markets for what they are. Whether we're talking about comic books, pogs, video games, rare coins, high-end pieces of art, Hermes Birkin bags, Rolex watches, cryptocurrency, or the overall stock market. You need to understand how these markets work over the short term and the long term to make good investment decisions for yourself, your loved ones, and your family, so you don't become a Timmy, a Kimmy, or a Poindexter. That's really all I want for you guys. Whether you love me, hate me, have no opinion of me, I don't care. That's what I'm trying to do on this channel. Enough said. Next question. Hey, Sean, you had previously mentioned that buying into the Dragon Ball Z Super Card game was risky, but since then it's continued to skyrocket in growth, all without Rudy or other social influencers talking about it. Why can't there be opportunity and potential outside just Pokemon and Magic the Gathering when there's strong demand in these newer games? I want to caution you on that. A lot of the demand that we're seeing in a lot of these new up-and-coming card games or items like Marvel Universe trading cards or even Garbage Pail Kids, we can't yet confirm whether the demand is organic or not. And what I mean by that, if I would get you into my DeLorean time machine and we would go back just 6 months to a year from now, literally 365 days from today, if we would go back in time, you would see that a lot of these items were not selling at peak prices why they are right now in the year 2021. That tells me there's a lot of people being misled into buying these items and thinking they are the new asset class going forward. I'm going to tell you something. If you are one of these Timmies that come on my channel and tell me, Sean, Marvel Universe trading cards are going to be the next big thing. I'm going to the market. I am putting $4,000 in some of these PSA 10 cards. I'm going to tell you, you would be far better off taking that $3,000 or $4,000 and spending it on a vintage, graded, pre-1975 key comic book. That market is already headed towards becoming an established market in the antiques and collectibles trade. And when we look at pre-1965 comic books, that market already is established. So why would you gamble on a speculative market that just 6 months to 12 months ago was selling for nothing on the secondary market? People brought that stuff out of the woodwork, they manipulated it, they sent it in to be graded, and now it's selling for a premium. That market, in my opinion, is not going to hold over the long term. There'll be some exceptions. Don't get me wrong. There's always going to be that one card that is going to sell for a premium 6 months from now, 5 years from now. But when you factor in opportunity cost and the cost of holding it and the cost of betting on what card that is going to be, I wish you the best of luck. You'd be better off going after a true key vintage comic book graded by CGC that already has value and already has an established market. That's my advice to you. Next question. Sean, congrats on the 5,000 subs. I know that in comics, most collectors seem to prefer CGC over CBCS. Is it that way in other collectible markets? Overall, does it really matter? Yes, unfortunately. For instance, let's pick on rare coin collecting. Right now, and I don't know why, PCGS graded coins sell for a premium over NGC graded coins. And in my opinion, both companies are 100% equal. But some people out there, some collectors, some investors place a premium on PCGS graded coins over NGC graded coins at present time. The same thing is true if you look at graded video games. Let's pick on that market. WATA games, those games that are graded by WATA, if they are in demand, they're selling for a premium over their VGA counterparts. Now, to be fair, VGA uses a different grading scale than that of WATA games. I did, one of the first videos I released on this channel was talking about that in depth. It's a horrible video if you do sit through it. I'm not very well spoken in that video, but I do get my point across. So certain markets, yes, this does matter. I also agree with you. Right now, in the graded comic book marketplace, CGC does seem to have an edge over CBCS and any of their other competitors. A thing that you do have to be at least conscious of if you are getting involved in the market for graded collectibles is you need to know that some of these particular grading companies are not ethical. You have to watch out for companies that do not have any market share. So just be privy to that. And if you analyze the market, if you spend enough time researching auction records, you're going to know what companies have the edge versus other grading companies that are out there just to make a buck. So that is something that I will say. But both CGC and CBCS are very reputable companies. It's just the market right now seems to be rewarding CGC graded comic books over CBCS comic books, just like the market for rare coins is rewarding PCGS coins over that of NGC graded counterparts. Next question. What do you think of the future of retail games, collectible businesses, antique stores, record stores, movie stores, and the like? In my opinion, right now, retail is fundamentally changed, not just due to the coronavirus, but also due to Amazon arriving on the scene, high-end auction sites, eBay, and the like, e-commerce in general, has really taken the wind out of the proverbial sails of a lot of these businesses that operate in retail locations. I've said this before. I would not be going into the retail business anytime soon. I do think there is going to be a catalyst in this market where people eventually tire of shopping for everything online and they do want to get back to going to a traditional retail store. I can speak on this firsthand. One of my favorite places to go is the King of Prussia Mall. If you want to Google that, it's one of the largest shopping districts in the East Coast. I can tell you that the King of Prussia Mall is always packed because they cater to higher end clientele. There is a Tiffany store there. There's an Hermes store. There is a Versace store. There's a Gucci store. So the reason why people tend to shop at that location is because it's high end. It's higher up. It's in a very high end area. It is very safe to shop there. And a lot of people like the experience. So I think if retail stores can get back into focusing on an experience, not just a product, they will have a competitive advantage against Amazon and other online retailers. But I really think in order to pioneer that, we have literally probably a decade or more to go. So if you're just a small mom and pop shop and you're struggling, I honestly hate to say it, but the writing is on the wall. You're probably going to want to get out of the business that you're into. If you don't believe me, I remember Rudy with Alpha Investments, when he first launched his channel, he had this goal of opening up a high-end retail store that focused on collectible vintage Magic the Gathering cards. If you noticed, if you go back and watch some of his earlier videos, he changed his tune on that. Retail, in my opinion, is suffering right now. And it's going to suffer for the foreseeable future as a result as well, unfortunately, guys. Next question. Sean, what's your opinion on modern era Magic the Gathering Collector's Edition boxes? Will whales of the future want to crack them for grading like they do right now with modern era Pokemon cards? In all honesty, yes, I hate to say it, but there is a market if you are going after collecting or investing in Magic the Gathering Collector's Edition booster boxes. As much as I don't like that market, it's too mass-produced for me. It's too sparkly. It's too new. There is a lot of people that are in that market, and like they always say, the trend is your friend around the bend until it ends. Magic the Gathering is a king of its domain right now. So is Pokemon. Those are the two markets. I really think they're going to eventually, it's going to take decades, but they're going to eventually transition to established markets in the trade. I don't see them dying out anytime soon. I'm going to be 100% honest. I don't like the modern era market so much, which you are asking in this question, but there is opportunity there. If you are willing to invest, you have a strategy in place, and you have the stamina to stay the course. Now, my position on these, if I was to invest in collector's edition booster boxes, as soon as they doubled in value, meaning if I came to the market and I paid $200 for a collector edition box, if that box went to $400, I would immediately flip it into the marketplace, sell it, and take the profit. That's just my strategy. If you're playing in this market, you're going to have to come up with your own strategy. So do whatever you think is best. I would not want to be holding these items for the long term, though. I really think the money in Magic the Gathering is always going to be in the vintage products. The modern era stuff is just going to be speculative flips going forward with some opportunities and some surprises along the way. Going to be 100% honest. Next question. Sean, two categories I'm interested to hear your thoughts about. Matchbook collecting and antique ships in bottles. Okay, if I had to choose between one of these, I would go after antique ships in bottles. There are some of those particular items that do sell for a premium on the secondary market. I will state overall, I hate to say it, both these markets are dying out. Matchbook collecting pretty much hit its peak in the 1980s, early 1990s. Today, not so much anymore. There's not too many people paying a premium for vintage matchbooks from famous hotels or locations around the world or the United States. It's just my assessment from what I see in the overall antiques and collectibles trade. Younger collectors are not collecting matchbooks like they were 20, 30, 40 years ago. The same thing is true with antique ships in the bottle. Now, if you get historical items of this nature, meaning antique ships and bottles that are historical, that have a good auction history, that have some relative rarity or historical significance to them, yes, that is an item worth investing in. But overall, those items are too far in between in the year 2021. I'm sorry, I know that's not what you want to hear, but this market is very, very speculative at present time, and it is starting to die out. Same thing I already covered with vintage matchbooks. Next question. Sean, funny, some of your earlier videos, you scoff at the idea of ever getting to 5,000 or 10,000 subscribers. Where would you like to see your channel in 2 to 3 years' time? I honestly don't have an answer to that. I am just putting out the best content that I can put out for all you guys, whether or not you like it, hate it, or indifferent. The YouTube algorithm will tell me that. I'm going to be 100% honest with you. I did have a plan for this channel, but after putting out the video that I did on Marvel Universe trading cards that I literally spent 15 minutes preparing for and seeing that video go viral, all bets are off because I did not expect that to be the video that put this channel on the map. And that's pretty much how we got to 5,000 subscribers. It was everybody tuning in to that video and hearing my opinions on don't invest in Marvel Universe trading cards. Here's the reasons why. And some people loved that video. Some people hated it. Some people were indifferent to it. But that video still got over 10,000 views. So to be 100% honest with you, I really do not have any plans for this channel over 2 to 3 years other than just releasing content that I am proud of, content that is original, and content that is non-hype driven that I truly believe in. And that's what I continue to do each and every day here on YouTube when I do upload videos. I'm going to take one final question, then I'm going to cut the video off, and this will all continue in part 2. First question, or I should say last question. What are the most obscure collectibles you have personally handled and experienced in the trade and or your business? Items of the occult, possessed items. I did come across a shrunken head that did turn out to be fake, unfortunately, or fortunately, I should state. And I also came across a human skull, which is a hilarious video that talks about that because the person that dug it up from their front yard, I kid you not, did not think to call 911, meaning they went digging in their front yard, they came across a rare antique bottle and also a human skull, and instead of calling the authorities saying, hey, I found a human skull in my front yard, they called an antique dealer saying, hey, how much is this antique bottle worth? By the way, I happen to come across an antique skull. Would you like to buy that? Newsflash, it is illegal to buy human skulls on the secondary market. So if you are somebody that just happens to murder someone or come across someone's bones, please do not try to sell them on the secondary market. It doesn't go over good when somebody who is well-versed in the antiques and collectibles trade, as well as the overall law and has a lot of common sense, gets a call from somebody telling them, hey, I found a human skull and a rare antique bottle in my front lawn. I'm willing to give you a bundle deal if you take both off my hands. Usually, you have to call 911 first to talk about the human skull. So I hope that helps clarify that. I do have a funny story I can share with you guys when I'm not so tired. So maybe in another video, I will talk about that story, how I came into contact with a human skull and a rare antique bottle. The rare antique bottle, by the way, was worth $2,500. The rare human skull had to be handed over to the authorities. More on that in another video. Thanks for watching. Have a great night. I'm off to bed. I will see you in part 2.